I am mining investor and editor of Resource Stock Digest, Gerardo del Real, here with my partner, Senor Nicaj, who's also an investor and the publisher of Daily Profit Cycle. This is the 270th episode, if you can believe that, of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets. There's a lot of fun, not so fun, great, not so great stuff going on in the markets. We're going to talk about some of the stuff that we're looking into. We're going to talk private placements a bit because we have a couple coming up that I think have the potential for life-changing gains again. And we're going to talk a little bit about some of the crazy stuff going on around us. There always is a whole heck of a lot of crazy stuff to get into. But first and foremost, as always, Mr. Hodge, how goes you, sir, this fine May 16th?
Doing great, Gerardo. Getting into May, had a good Mother's Day. Weather's warming up. Markets are doing pretty well. Commodity prices okay. T-ball is underway. Life is good. How are you?
I am fantastic. I'm going to swear here in a second, folks. So if you have kids around, this is a good time to turn it down and put the headphones on. It'll be quick. Life is fucking awesome. Roaring fucking Kitty is back, Nick. Come on, baby. Come on, let's go. Are you ready, Nick?
I don't even think Kitty. I quite recalled who Roaring Kitty was. I had to brush up, but yeah.
Keith Gill, man, the guy is great. Look, that's one of my favorite recent movies having to do with the markets is Dumb Money. They did a great job. The cast is fantastic. It was well written. I sent that movie, I think it came out like a year ago, to several of our friends, family friends that have just now started speculating into the junior resource market. I told them it's something like this. At some point, you're going to have something like this, right? And then Patriot hit. This was right around the time that Patriot really started taking off, was when the movie came out. And so then Patriot pulls back 50, 60, 70%. And I told them, I said, remember the movie and the link? Did you watch the movie? And half of them were like, oh, yeah, no, you told us this is how it typically goes, right? Except that you don't typically get 10,000% gains. I said, well, then you also remember the other part, right? The pullback part. They're like, oh, yeah, no, it's fine. Still up 5,000%. The other half of my friends that did not watch the movie were like, we didn't watch the movie. So I had them go watch it. And they're like, oh, we didn't know. So anyhow, I like the Roaring Kitty handle and cultish following that he has only because it makes for good TV. And I wrote a piece for dailyprofitcycle.com, and you should go to dailyprofitcycle.com/subscribe for all of our talented editors, including Nick Hodge and myself's ideas, thoughts, rantings, ravings. This past week, my ranting and ratings was a bit on Roaring Kitty and how, look, although I subscribe to his cult following and I really enjoy how entertaining he's made it, and I like the conviction of this is my portfolio, this is how much money I got into it, I'm going to put the spreadsheet up, you can follow along. Look, that's as transparent as most investors and speculators in any space will be with their audience. That's what he did the last go around. This go around, all he's done is just tweet a bunch of memes and, GameStop is up 150%, then it's down 35%, then it's down another 15%. I get enough of that in the junior resource space for me to go and speculate on any Roaring Kitty favorites, but it's fun to watch from a distance, and I think a really good analog about the world that we live in right now, whether it's financial or otherwise, right?
Yeah, I mean, YOLO, right? I mean, we've talked about that, the willingness of these investors, cultish investors, Reddit investors, or otherwise, to place outsized bets into these meme stocks and YOLO type bets because of their outlook on life, or because they, don't have a significant amount of capital to invest, etc. A lot of things I want to say. I don't even know where to start. I don't invest enough of my capital in any single position to, have it be that meaningful for me. Certainly not in chasing meme stocks like this. He was silent for 3 years, I guess, is one thing worth pointing out. Again, I had to refresh my memory as to who he was. I didn't watch the movie either, although I know that the movie was made and what it was called. So
it's a great movie, Nick. I highly recommend it.
Part of the game, man. I mean, just interesting. You have to talk about it because of how high the volume was on GameStop and AMC, as this happens and as this plays out. But, forcing hedge funds to cover just with memes, it's interesting. It's interesting to watch for sure.
I kind of like that aspect of it.
The cat T-shirts and wristbands, I mean, it's made for TV. It's perfect. Bizarro World stuff, right? But at the end of the day, it's not investing, right?
It's not.
Even, Dave Portnoy is back out. Same with sort of, I'm not going to say junior resource speculating is not investing. I mean, it is speculation, right? These are listed equities and so are these other plays. But again, for me, I'm not sure about for you or for some of our listeners, when I look at my asset allocations and then how I allocate capital in my positions, there's not like a meme stock or a YOLO like allocation, right? There might be some bets on low market cap companies that I think could, deliver outsized returns, but it's not based on memes or cultist personalities or anything like that. So anyway, fun to watch, great to banter about it, et cetera, for sure. And,
who needs Benjamin Graham?
Maybe we'll have to lean up in our chair soon with our phone on some of our holdings.
I mean, look, man. I just think it's a perfect analog metaphor, call it what you like, of our times and how much of our society is entertainment driven and how we could barely get kids. Like I have all of my kids read a lot of the real basic fundamental economics books and trading books. Not because they're particularly interested in doing what I do. I just want them to have some sort of concept of the things that you should consider when you're considering allocating capital to anything. It could be an equity. It could be a piece of property. It could be a business idea, whatever that is. I want them to have a fundamental concept of what that looks like in a framework that is, that involves due diligence. So much of our culture today just wants the entertainment and is perfectly willing to go ahead and take their $5,000, $10,000, $15,000 in savings and just say, you know what? It worked once and the movie was great. And I like cats too. YOLO, let's go, as you said. So it'll be fun to watch. It'll be interesting. I'll tell you this, I wouldn't bet against them. Like, if we learned anything from the first go around is he's got some high conviction and he's got some capital. He's got a lot more capital this go around than he did the first time and a whole hell of a lot more influence. And 2024 is the perfect year for this madness. It couldn't be a better year, right? It's an election year. The Dow just touched 40,000 before pulling back because, of course, everything is awesome. Commodities are in a super cycle. $1 trillion debt levels, unsustainable interest on that debt, war all over the place. Roaring Kitty is a welcome addition to my 2024 bingo card. I'll take the entertainment, and I won't be losing any money with it because I also won't be making any money with it. But I am here with popcorn for the entertainment portion of it. I caution you all to go to dailyprofitcycle.com and go check out the piece that I wrote. It was a brief and quick one on my thoughts and the things that I am investing in. And that's the stuff that, you don't want to drop on your foot or that you have to dig out of the ground and that you just can't make out of thin air. And I think that's a perfect segue to talk about where we're at, right? Everything is awesome in the markets. Touched 40,000 in the Dow, pulled back just a bit right before day end. I am seeing the powers that be, and that means the Fed and Janet and, Jerome and his merry band of economists and everybody else start coming up with the BS I said last week they'd figure out a way to start coming up with, and that is a way to measure inflation in a way that it isn't representative of the real inflation for real everyday Americans. And I saw something today on the CNBC Twitter handle, and it was a tweet about a new renters index and how that new renters index is tracking deflationary pressures on rent prices. And I couldn't help but not laugh because it's funny, not funny, that it's just this past year where you see like the little, trickle down in rent prices. And they didn't show the chart from 4 years ago where the rent started going this way. Hockey stick sticking up, right? So they just show the blip. Like, see, rents are coming down. We do have some deflationary traction here. I think we're going to see some more of that BS. I think that's what they're going to use for a rate cut before year end, despite the fact that it's an election year, despite the fact that Jerome says he doesn't like to meddle. I think the debt is so unsustainable at this point that they kind of have to meddle and get rates down a little bit. We'll see. I'm speculating here, but I know when I start seeing the outlets that talk behind the scenes with the powers that be. If when they start floating out the little test white papers on people, I pay attention because that usually has a purpose.
I do want to talk about the Fed. I want to go back to the meme stocks for a second because I was seeing memes about the meme stocks, and he mentioned that he has more money this time. I would say that I think a lot of people playing that game don't, and I sort of already said that, but the memes I was seeing were like people talking back to their boss saying like, I have 36.2 shares of GameStop. You better watch your mouth.
Y'all better start writing PTO out there, people.
So it's still a big boys game, though, is what I was going to say. Because if you look at the volume that stock was trading, right, he triggered the algorithms. He triggered short covering, and so there's retail buying and YOLOing, but you still got to be cautious of the algorithm and the flows and the put call buying and all that. Because look, I just pulled it up. It went round trip, right? I mean, it went 21 to $64, and they closed today at $27, right? So it cuts both ways for sure. On the Fed stuff, it's almost like looking through the looking glass. Like I flipped on Bloomberg while I was eating my lunch today, and it's like it was hard for me to even follow like how they were trying to make the case for disinflation and this and that. And I'm like, look, I get the number came out 3.4% in line with expectations or whatever, but dude, prices are rising. Like copper's at all-time highs. You mentioned the government debt. Like I've been saying how the stock market's okay because the GDP has been okay and earnings have been okay and wage growth has been okay and hiring has been okay. But a lot of that is driven by the debt, which is inflationary by nature. A portion of that is deficit spending or whatever. And so to say that, 3.4% as inflation is going down or cooling off is, it's just one of those government tricks, right? I was writing today, like if the temperature went up 3.4 degrees, would you say it was cooling off, right? I mean, the inflation is 3.4. Prices are 3.4% higher in April this year than they were last year. So anyway, then they talk about core. They take out the food and energy. Like nobody uses that stuff. You were just talking about the renters index, and so it's confounding to me a little bit. It almost blurs my picture. Like I sit down, I write my letter, I look at the things, I look at the 2-year, I look at the 10-year, I look at the Fed expectations, what the market's pricing in, and then I turn it on and I listen to the Bloomberg Talking Heads talk or Jamie Dimon, and I'm like, wait, what? Like I was just looking at the numbers, and now I listen to their narrative, and it's all over the place, right? So at the end of the day, for me, prices are higher. Materially for commodities, soft commodities, hard commodities, major energy input commodities. And so I don't know what else you want to talk about. I think they wanted that cooling narrative. They want to frame it that way. The Wall Street wants its rate cut. They want inflation to come down, and they want Jerome to cut rates. And so they talk that up in a big way. And the market started to move that way, like the 2-year yield pulled back a little bit, the dollar pulled back a little bit, as would happen if we were going to turn dovish. But they caught themselves, the day after the CPI number, they turned back around, the rates started going back up, the DXY started going back up. And so they know that there's a higher for longer inflation scenario. And outside of that, that doesn't mean the stock market can't go up. It doesn't mean that gold can't go up. But in fact, did go up. Bitcoin's back to bullish. I mean, if you look at the prices of things, lots of things bullish, right? So that's sort of what I've been saying is you can almost tune out that Fed. I've been saying that, I don't know, since February or March. Just look at the numbers, look at the rates, look at the GDP, look at the earnings growth, and don't think, look. So anyway, lots of stuff working out there. I can't tell you when it won't work, but it's above my pay grade.
Yeah, look, the headlines are selling, right? So just every now and then for fun, because I like getting a good laugh, because I like to be an optimistic, happy person in general. I'll go to CNBC.com, right? So I'm on CNBC.com, and I just look at the quick link headlines. Ukraine war, Dow's road to 40K, McDonald's $5 meal, Walmart surges to all-time high as earnings beat on high-income shopper Netflix users. And again, it's the perfect like bingo card for 2024. Walmart is counting on high-income shoppers to beat
trading
on
down
earnings, right? And so Ukraine war, again, aside from the catastrophe that is and the human toll that it has, I couldn't help but think of Druckenmiller and that the ETF that you sent me where copper and defense stocks are a significant allocation because of the fact that we don't see a more peaceful world anytime soon. I see McDonald's pitching a $5 meal. Like when I was growing up, a $5 meal was like you got everything and you supersized it, right? And so the fact that now they're pitching this as the affordable McDonald's meal, and then Netflix users, because we have to be entertained, heads roaring kitties popularity. So it's a strange time to be alive, folks. It's an interesting time to be alive, and it's a time with a lot of opportunity. And that I want to touch on gold. You touched on copper a bit, but I want to touch on private placements, because I know for both you and I, a lot of a lot of the profits and the gains, especially the last couple of years during a tough bear resource market, have come from private placements and the leverage that they provide. And I don't want to get too into the details about warrants and F warrants and all of that, but I do want to say, if you meet the threshold for being an accredited investor, the deal flow that Nick and I are having access to right now, and a couple of deals in particular that are coming up in the next month or so, are some of the best that I've seen in a while. One in particular, I'll be writing my second biggest check ever for, and I've already written a substantial check for this company. And actually, if I think about it now, this will be the biggest check that I write, because when I wrote the Patriot check, it wasn't as much dollar-wise as this is going to total to be. So it's even a more aggressive bet for me than Patriot was. And, everybody knows Patriot for me was a life-changing bet. So, and for a lot of friends, family, and luckily subscribers as well. But I say all that to say, if you meet the threshold for being an accredited investor, Nick and I manage a service that basically gives you access to our deal flow and allows you to participate in helping finance some of these companies. We try to provide access to everything from tech companies, crypto companies, biotech companies, resource companies, gold, copper, uranium, all the commodities, you name them. And if you're ever thinking about participating in one of these private placements and you meet the threshold, now is a damn good time to start looking into that. And I would recommend that you do that here before the next couple of weeks, because I know the next couple of deals, and then the one in particular, are going to be creme de la creme if it goes the way I think it's going to go.
Well, we want to answer people's questions. So it can be a quasi-murky world. There are some things that are needed, like a full-service broker. There is some different type of paperwork that is involved, and people might have some questions, particularly if they're not that used to this type of investing or speculation. So I'm thinking of like doctors and dentists, chiropractors, small business owners, service company owners, HVAC company owners, landscape company owners. These are just people that I've come across over the years that have subscribed to services that we offer and participate in private placements, right? They have businesses that generate for themselves a significant income, and they've done the things much like I have, and this is sort of my story, and I'm hoping maybe you'll share some of yours as well. 10 years ago, I had gotten to the place where I found myself making a couple $100,000 a year, and I was doing all the things, right? I had maxed out the 401ks, and I had bought the life insurance, and I had started the 529 plan for our first kid, and all that sort of stuff, and I was ready, I think, to take it to the next level. And I had always, heard of private placements, not always, I guess, but I guess since I started, writing in the junior resource market and about the junior resource market, I had heard about private placements, but had never participated in them. And as I got more established, started to be offered them. And so when I had enough of spare cash to participate that way, I had already been buying, junior mining shares in the open market. I decided to start writing checks privately into private placements. And it worked out quite well. So, me in spreadsheets, I have one that goes all the way back to 2016. And I went back and looked at a couple of the first private placements I did. And the first one I did was a company called Silver One. That's a company that's still around. I financed that or helped finance it in late summer, early fall of 2016 at 25 cents, and was able to sell those shares within a year for something like 85 cents. And I thought, well, this is pretty good, right? Buy at 25 cents, sell at 85 cents. This is good work if you can get it.
Yeah.
So I did another one with black, C, copper, and gold. I'm just reading off my spreadsheet now. And that one didn't work out so well. I think I squeaked out flat. But that was one of Vince Sirachi's deal, and how I originally met Vince was through a deal called black, C, copper, and gold that ended up not being much of anything. And then the third deal I did was a company called Immunoprecise that I ended up making like 2,500% on. It rolled back, so I ultimately financed it at 25 cents, but it did list on the NASDAQ and go to over $25, and I had some shares left as that happened. So that was a good one. And so sort of indicative of the overall experience, right? Like, yeah, they don't all work out. But the ones that work out really well, the Immunoprecises of the world, the Patriot battery metals of the world, the Bravos of the world so far, and some other ones that we've had great success with. In my experience, and in the experience of the service that we put out, those wins have always covered by far the ones that don't work out, right? So that's one thing. And then I guess I'm not sure what the other thing is. I'd like to hear from readers, and that's what we're inviting them to do. So in the first week of June 5th, we're going to have a live webinar, not something pre-recorded, but an actual live webinar that people can, link into or phone into and participate. We'll give a presentation about some of the private placements we've done, what we've learned, what we've lost, what we've gained, what to look out for, and then we'll open it up to questions. We do want to know, what are your questions about private placements? What would it take to get you involved in private placements? Do you want to do private placements? Do you meet the threshold of being able to do private placements? All that sort of stuff. How much capital do we allocate to them? What sort of brokers do you need? We're happy to answer all those questions. And then, as you said, we'll have a private placement at that time, a copper private placement, copper, silver,
gold.
I won't say polymetallic, but opportunity that will be open, a private placement they can invest in if they so choose at that time. So we'll be putting out ways that they can join that call, but essentially you have to phone us up. So we have white glove customer service. We have a director of customer experience, and this is a high level service, right? So you mentioned being an accredited investor. That typically means you make $200,000 a year or already have a net worth of $1 million. And these deals people are writing checks into anywhere from typically $10,000 to $100,000 or $200,000. So you're going to need to be able to pick up the phone, give us a call. You'll talk to Jimmy, who is our director of customer experience, and he'll get you registered for this webinar where we're going to go over everything about private placements. So those were sort of three of my early deals way back in 2015, 2016-ish. Do you have anything you want to share about your early days in private placements?
No, mine came later on, to be honest with you, because it took a little bit for me to gain, the kind of traction in the space and the income, meet the income threshold levels that I needed to actually participate. I think, if I'm being 100% honest, I think the very first one I participated in was one that actually did well. It ended up being, it was a graphite company that had some rare earth assets, and the name was Flinders at the time. And look, I checked the box and conflated having real estate worth $200,000 for, making $200,000, and sent the paperwork in and was lucky enough to participate in that financing, and the rare earths went on a run, and I thought I was smart, and that was a round trip. And so I learned, some humility in the market, and I learned about taking profits, and I learned, and even to this day, that's one of the hardest, things for me. And sometimes it works, sometimes it doesn't. Sometimes it looks clear as day, and then you don't take profits and you get a pullback, and you look back and you say, I should have taken profits. I have gotten better at knowing what I own and having a timeline and an exit strategy. But these are all things that you learn, along the way. And it's been a fun learning curve for me. But yeah, it really did take me a minute for me to actually be able to get to the space where I could, participate in these financings on a consistent basis. And be absolutely clear, folks, when we offer something, we're not offering a financing that we're open, we can make 25% or 50% on. It's triple and quadruple digits is always going to be the threshold that we're looking for. It doesn't mean we're going to hit that every time. It doesn't mean we're not going to have losers, because that's capital markets. But that is what we look at when we look at deals. Can this provide a triple digit return? Does this have the potential for a quadruple digit return? And again, every now and then you get a special one like an Immunoprecise or a Patriot Battery Metals, which will make most of the rest of any portfolio look great despite what's in it. So that's really it, folks. We're trying to provide you with as many different services within our knitting, right? You have to stick to your knitting. And fortunately, Nick and I have been at this long enough to where the things we're comfortable allocating capital to are different, but we have experience in doing so. And hopefully we do a just job in explaining to you all the risk and the rewards, because both can be substantial. We try to mitigate the risk for you, and hopefully the upside takes care of itself.
Yeah, I mean, you learn as you go as well. And, I've done over 100 of these deals now since 2015. Some of them were, multiple checks into the same company that you finance over time. But like I say, in my experience, they've worked out. I mean, we don't have to go to the exact numbers, but I've, written checks worth, millions and have already taken millions out and still have millions in the market. So do the math on that, right? Like I paid myself to own millions of dollars worth of shares. So it's been beneficial for the bottom line, to say the least. And last thing I would say is two things. One, it allows you to speculate on trends. You mentioned rare earths, but what happens is inevitably new companies are formed around new trends in the capital markets, whether that's rare earths or cryptocurrency or cannabis or lithium or whatever it is. And inevitably you end up funding two or three of the companies in the space. One does well or two do well, and they pay for the one that doesn't. At least that's been my experience, right? I've had real good success with lithium and cannabis. And then the last thing is you get to see these other industries, right? It's like venture capital in that way, right? You get to see all these slide decks of companies that are being formed or that are trying to do something new, or, have acquired a new asset or whatever it is. And then you get to decide if they're worthy of receiving your capital and watch them go and execute. It's like Shark Tank in that way with your own dollars. And, you're participating at the level that you're comfortable with, or not at all if you're not comfortable. So we look at the deals, we pass them through. And again, having a webinar on June 5th to answer some of these questions for you. But by all means, if you're a high net worth investor, if you're a business owner, even if you're, a financial advisor, have a Series 7, whatever it is that qualifies you to be an accredited investor, run a trust, run money, run a family office, are looking for deals, we can be, one of the tools or one of the pipelines of deals that you receive. So enough about that. If you want to hear more about private placements from us, we'll have some materials out in the next week or two that you can phone us up and get on the list for this private placement webinar. You mentioned rare earths, and I saw Uncle Joe on the list has been busy with some things, including rare earths. Do you want to talk about that?
Yeah, no. Look, somebody woke him up, right? We had a week where he finally signed the uranium bill. That exactly. And he's like, "Oh shit, better get to work. It's an election year." Where are all those bills I was supposed to sign 2 months ago, right? So, look, the FDA and the alphabet people are now looking to classify marijuana as a less dangerous drug than heroin, because of course it is. But anyhow, they're finally getting around to doing that. That has been signed. The uranium ban of Russian, imported uranium now has finally been signed. That again speaks to the premiums that North American and safe jurisdictions are going to receive when they make these discoveries. I've been saying this for quite some time now, that this was going to be a more prevalent issue moving forward, and we're absolutely seeing that play out on a global stage. And so know what you own and know the jurisdictions that those assets are in, because that's going to be more and more important here as this commodity super cycle develops. And then, last but not least, you had a critical metals tariff that got put against China in what I've said again is a silent Cold War. It's only silent publicly, but it's definitely not silent behind the scenes. And if we're watching actions and not words, it really isn't silent. There is absolutely a battle here brewing between China and the U.S. And look, there's a profit opportunity there for us that are in the know about the deposits, the jurisdictions, and the companies that have the ability to advance those assets in a meaningful way. There's a significant leg up there when it comes to allocating capital. But as a country, as a hemisphere, North America lags way behind China. And, the bottom line is the U.S. knows this and doesn't want Chinese vehicles, which oftentimes are superior quality at a fraction of the cost, being imported over here. And the way you do that is you put 50%, 75, 100% tariffs on products that are made with foreign critical metals in a bid to drive the price up. And the only reason you need to do that is if you can't compete on an even playing field. And be absolutely clear, that's what we have here. It's, in baseball, it's like giving the other team a 5-point lead head start because you have better pitching, better hitting. You're not even worried about it, right? This is kind of the equivalent of that in reverse. And so, yeah, look, these tariffs are going to have some effect. The uranium ban is going to have an effect. I think it's way overdue, much like the legislation around marijuana, which is dated. But that's what we do here in this country is our politicians move slow, no matter how fast the citizenry wants to move and no matter how much the citizenry wants to advance as a society. Sometimes that's held back by the powers that be. And unfortunately, a lot of the powers that be in this country are 70 and 75 and 80 years old and trading their own stock on bills that they're proposing and legislating over. And so, it's again, interesting times we live in. Curious to see the fallout from a lot of the stuff that was signed this week. I applaud all three of those actions, even if I feel some are not as aggressive as I would like them to be personally. But at least we're taking baby steps in the right direction, right?
Oh, it's good that the government narrative is going in the right direction. It's good to see support. It's good to see the headlines. That's all supportive. I view it as a inevitability that the uranium price has to go up, that the U.S. is going to have to mine and process more rare earths, and that's why I allocate capital the way that I do. And so, yeah, they're late to the game, obviously, but any support is welcome, even if it's slow support. So, and the companies responded. You look at the MP Materials of the world, the Neo Materials of the world. Those stock charts perked up in the past week. Even Energy Fuels, which I was saying I didn't like their recent rare earth deal. That stock has been up over the past week. So good to see the action, not just from the White House, but it seems like everyone else is getting the message as well. And some people who talking their own book, like I saw Robert Freeland this week, I think was headlining or speaking at some, Middle East conference about minerals. And so I saw the clips of him on CNBC and on Twitter and things, talking about how we've got to mine as much copper in the next 30 years as we have in the last 10,000 years, and so he's dusting off his promoter's hat, as I've been saying the past couple of weeks. He obviously sees copper at $5 and knows it's his time. But even like Jamie Dimon was on Bloomberg talking about the inflationary pressures of energy and renewables and how they're driving up the price in commodities and things like that. So people are getting the message, even if we were seeing it so far ahead of time. Remember we were talking about the green cowboys and the green barons of the future and stuff like that. And so it's always been an inevitability for me, and it has made me millions of dollars over the past decade, and I continue to be invested in the market. And so it's playing out. I'm not sure how else to add to that, but there's continues to be opportunities, and we do it day in and day out. And you said, we know where the deposits are and we know the companies, and I think we take it for granted sometimes because the mining network is a small industry, and the junior mining is obviously a subset of a small industry, so it's smaller there unto itself. But we welcome outside people and anyone looking to get involved. So we're constantly doing efforts to attract those people, whether that's through search or offering reports or whatever it is. But anyway, I'm starting to drone on. It's a big opportunity, and I'm glad the government's finally getting the message. We saw it a long time ago.
No, and look, what it means, folks, is going to be higher prices for critical metals. It's going to mean higher premiums on deposits that are in stable jurisdictions. And I got to talk Corvette, and I have to talk Patriot, because it had some very good news that surprisingly the market understood after half a day of trading where it didn't understand it. So Patriot last week announced a new high-grade zone that I think is going to deliver a welcomed complement to the high-grade Nova zone, right? And I think we'll see more, and the news release alluded to it. We'll see assays on that new high-grade zone, which is kilometers away from the other discovery in the coming weeks. That's what the news release said. But the really important news, and it's interesting because it was announced while the Australian market was open, and the headline reads, Patriot and Albemarle conclude the MOU. Basically, it's done, right? The time period for which they allotted themselves to either move forward in a structured and formal way, that has passed. And initially, the stock sold down as much as 9.5% in Australia. And man, do I feel bad for the people that sold that shit down 9.5%. Because y'all apparently can't read a whole fucking entire news release. Because if you scroll all the way down, Ken Brinsden couldn't have been more vocal about the fact that Albemarle wanted exclusivity, that Patriot isn't interested in being exclusive with anyone, that there's many potential suitors and strong interest to develop a strategy where there's multiple partners that will help with the downstream supply chain that they're looking to develop and advance, and that those talks are ongoing, and that, by the way, and this is the part that I don't know how people missed it initially, that talks with Albemarle continue. The relationship is still a good relationship. It simply is not going to be an exclusive one. And look, I don't know the folks at Albemarle. What I will say is the market and one activist investor in Australia in particular really helped them dodge a bullet. They were willing to pay a significant premium for Liontown, which let's not get into, throwing a rock at the asset or the company or not doing that. Let's just imagine it's going to be a profitable mine and a good asset, and there's not going to be permitting issues, and it's going to move forward in its own timeline. The market today values that at much less than what Albemarle was willing to pay when it made that bid, significantly less. And had they went ahead and paid the offer they made for Liontown, its balance sheet would have been severely depleted today, and they would have big financial issues, bigger financial issues than the ones staring them in the face today. If I am Patriot and I just saw a major company that is a good partner, that has technical acumen and ability that nobody can downplay. But if I am Patriot, why would I give myself just one shot on goal with one potential partner and not entertain the litany of other partners that have as much experience, as good or if not better balance sheets, and can provide diversification in the event of a market situation with one specific company where now one entire operation is at risk because the partner can no longer dance. So I applaud the move. I think we're going to likely get news in 2024, definitely. And I've been off on my timelines before, so don't hold me to it. It'll happen. It usually does. But I think we'll get news of new partners and new offtakes and new MOUs. And yes, listen, I would love to have seen Albemarle say, well, we're willing to formalize something in a non-exclusive way. That would have been the best outcome here. Go ahead and solicit other partners. And maybe that still happens. But for now, I believe, my personal speculation, this is just speculation, is that Patriot was never going to give in to an exclusive to just one company. And I think in the mid to long term, that is absolutely the right strategy. And the market got it, because I don't think it's a coincidence that the following 2 days, the stock is up pretty significantly, especially if you consider it was down to 9% on the trading day in Australia. And then, that was followed up by a big day yesterday, another big day today on good volume. And I know some of that volume is coming because Patriot is being added to an index that is doing buying and has until the 31st of May to do the buying, to conclude the buying, so it can be introduced into the index. But some of it is also people reading between the lines and reading the tea leaves and going, okay, Ken's got a clear strategy on advancing this asset, and also has got a new high-grade discovery to go along with it, and also is cashed up, and also lithium is bottoming. So timing couldn't be better. Again, if you're looking for phenomenal tier one world-class assets in a premier jurisdiction, in a commodity that's bottomed and is trickling back up and is headed higher likely, Patriot Metals is a no-brainer, right? And again, I'll continue to sell what I need to sell to take care of taxes and to take care of tuitions and to, reallocate something and into something I feel, has 10, 20, 30, 40-fold potential. But be absolutely clear, it is by far still my largest single personal holding and will continue to be so for likely some time.
That'll happen when it goes up 110 times.
That's the rant, folks. Haven't given you one in a bit. Again, I do wish that the company took more time on the retail side and on the family office side because I think it's valuable and important. Again, I completely understand the strategy to talk to the institutions and the funds. That has paid dividends. I believe there's a way to do both. But that aside, I couldn't be happier as a shareholder on the progress the company's making. And clearly, they're over the moon with everything that's going on over there. So, yeah, for those of you that painted it as a negative or somehow they were blindsided by this, I think that couldn't be further from the truth.
Like it. Still a shareholder.
Let's go. Same. Gold, technically. Gold and silver, technically. I wanted to get your thoughts because silver had itself a nice little push towards 30 before pulling back a bit, and gold had itself another nice little push towards 2,400 before a tiny pullback. 23.75 on the gold side, 29.47 print on the silver side. We already talked record copper prices. Excuse me, those are headed higher, by the way. You've been told for a while now. Gold and silver, what you got, Nick?
Pulling up charts. It didn't break silver. It didn't break $30, right? No,
it did not. Nope. It went for the kiss on the cheek at 29.68, but she turned around at the end and it wasn't happening.
Yeah, 29, even a little bit higher than that. I mean, it's bullish. It's bullish all the way down to 27. And, once it gets above 30, it's got a long way to go. This is what I was saying on INN a couple of weeks ago. Like, gold's already put in record highs, right? But silver's still down around $30. If it can get above $30, I think it puts all-time highs in place sooner than later. And so, we're allocated to silver. We started buying it a month or two ago. It looks like... it is bullish. It remains bullish, and we'll get much more so if it can close above that $30 level. Gold is super comfortable in the $2,300 range. Rates go up, rates go down. Gold doesn't care. Dollar go up, dollar go down.
Could care
gold
less.
Doesn't care. It's in a bull market. It could go down to 2,300 and remain bullish. Needs to close above all-time highs before the new all-time highs come into play, but. Bullish. The equities are starting to act well. GDXJ has been okay. GDX is okay. Earnings have been okay, and yet lots of junior producers and developers and explorers that still have a lot of upside to go. Quality ones at that. So silver and gold is bullish, and I think we're going to get close to wrapping up here. And you're going to ask me what I'm watching. It's an easy segue into PGMs, which we haven't talked all that much about, but which again I mentioned on INN the other week. I was talking about platinum and palladium, starting to catch a bid and how they're typically found with nickel. And last week we mentioned MineHub, and this week I would probably mention Bravo because they continue to drill and have been putting out good results. We know that mineralization has been getting better at depth on the PGM side. The previous owner, Vale, only drilled down to about 150 meters, and so Bravo's been going below that. But they've also got a semi-massive sulfide component to this in the form of nickel and copper mineralization that they did some geophysics work on last year that they finally have been drilling on recently. So hoping to see those results soon. And, we know that there has to be a feeder zone somewhere. And we've always talked about, how that would change the story a bit if we could get, more massive sulfides in nickel and copper. And nickel prices have been really strong. Copper prices, obviously, at all-time highs at $5 and PGM starting to perk up. So that's an interesting one, I think, to call out here. And one that has come down a lot. Look, I think we financed that at 64 cents Canadian, again, in a private placement. And it went to over $5 and then pulled back to $2. There's a gap in the chart we had talked about many episodes ago, and then I had written about for a while.
It's $2
right.
now.
It's $2 now. So, hindsight's 2020, and you wish you would have taken some off the table. But two, I think finding a feeder zone or changing the mineralized profile in a big way would get it back to those higher prices sooner than later in the environment that we're in.
Yeah, no, I couldn't agree more. The company's always been very upfront that, they have a tier 1 deposit in a great jurisdiction on private land with a hugely supportive Brazil government. And oh, by the way, the Chinese have a huge appetite in that part of the world for these types of deposits. So don't rule out a buyout at any given point with that company. But the company has always been very, very upfront that as great as the current PGM deposit is and as big as it is, they really would love to add a VMS type, a nickel copper discovery to it. And they've been trying to vector in towards those feeder zones with a lot of really, really good technology and in geo work. That drilling is ongoing. I'm excited to see what they're able to find. I would love for a high grade, nickel copper discovery with copper at record highs, and then in nickel and PGMs, looking good. But we'll see. I agree at current levels, if they never find another thing, it's an absolute bargain at today's prices. So still a shareholder. And again, we financed it at 64 cents Canadian. So happy to hold it and happy to see what the news delivers here in the next coming weeks and months from the folks at Bravo.
Yes, sir.
That's it. That's all I got. Any words of wisdom before we leave, Mr. Hodge?
No. Tune out the Fed. Inflation is higher. I don't expect a rate cut. Lots of bullish things in the commodity space. Lots of things to buy. Do your research. Find the quality assets and companies, and put your capital to work.
Join us June the 5th. Is that June the 5th, Nick? Join us for that webinar. It'll be live. It'll be, as usual on our end here, unscripted, and then just our thoughts and takes on the market. And look, I think it's going to be a heck of an opportunity. It'll be the biggest check that I write this year. I've already written a big check to this company, and I couldn't be more excited about it. So looking forward to that. I am Gerardo Del Real, along with Mr. Nick Hodge. This was the 270th episode of our weekly therapy session that we like to call Investing in Bizarro World. Have a great week out there, everyone. Take care of each other, be kind to each other, and make it count.
Sayonara.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.